Welcome back. We are now in the banana zone, as Raoul Pal calls it, reaching new all-time record highs. And a lot of people on my channel are saying, Cryptoviser, you were wrong. And maybe in the grand scheme of things, I was wrong, where I called the top of the market. We have gone higher, but as I explained when I called the top of the market, we could be going much higher, because once you enter what is considered the banana zone, the straight up perspective, eventually you're going to correct. And in today's video, we're going to explore where we are in the cycle, with Wall Street executives and ETF issuers calling for $200,000, $1 million, and more. We're going to be also discussing where the money is flowing, because from what I'm seeing, there is definitely a shift underway. And this may be a natural gradual shift, or this may be a banana zone shift. And that shift is away from Bitcoin into the altcoins, and more specifically, the major altcoins that are potentially going to be interacting and integrated with traditional finance. And so today's video, we're going to be exploring stocks, crypto, analysts, Bitcoin maximalists, and much, much more. So make sure you guys are subscribed to the channel. That way you never miss a new video. We upload every single day of the year. Sometimes we're going to be right, sometimes we're going to be wrong. But our macro thesis, our zoomed out thesis, has been accurate for years. We called the top of the market in 2021. We called the bottom of the market exactly 1 year later to the day when FTX collapsed and everybody was freaking out about what is going to go down next in crypto. We on this channel were buying the bottom of the market, $15,500, because we understood the macro environment and where it was leading to that major collapse and corrective phase of the market. And so I don't think that we're there, but we are getting there. The further we go, the closer we are. This makes sense, right? If you believe that we are going to be in a bear market at some point in the future, that means the further we go, the closer we are to that point. So let's get right into it. Give the video a thumbs up, hit that subscribe button if you want to help support the channel financially. You could also become a channel member for as little as $1.99 a month. Click the join button or subscribe plus button down below. First, we're going to hear from Bitwise CEO, I think this is the CEO, where he believes and lays out his thesis for where Bitcoin is going this year by year's end. Let's listen in.
I think this cycle, which I'd really say lasts through this decade, like until 2020, 30, I think it probably gets to about parity to gold. That's my baseline prediction. So at current prices, that's a little over $1 million a coin. Again, I could be wrong. Like, could go down. It's hugely risky. It's not financial advice. But if you think about, sort of the level of penetration it's gotten to in each cycle, this feels like the right sort of scale of penetration. And I think the supply dynamics are about right for us to get there. So that's our prediction at Bitwise, 200K by this year, $1 million by the end of the decade.
Now, I want you guys to pay attention, because a lot of people would take from this video, oh, we're going to hit $1 million, or oh, we're going to hit $200,000. But they're not listening to the thesis. The thesis is that this cycle, which we know this cycle is coming to an end, right? This 4-year cycle, or I should say the bull run part of the 4-year cycle, right? Because we've already been a year and a half basically into the Bitcoin halving. And so if we know we're on a 4-year cycle, right, we're kind of in line to be exiting that bull run. But what he's saying is that their thesis on this cycle is for the decade, right? It's much more zoomed out than what many people are looking at. And so that's their time horizon, right? Decades. What is your time horizon? A lot of people who trade these markets, their time horizon is like 3 days or a few weeks or maybe months. But it's not really this long-term time horizon. And if it is, right, it's just because they're locked in a coin and they can't get out, or they think that it's going higher, and then they get an extreme greed, and then the market does collapse or correct, I should say. And then they're back in the red, and then they have to keep, cheering on that individual crypto or stock or whatever until it goes back into the green. This is a losing strategy, right? Because even if you don't believe my thesis that we are at the top of the market, which we literally are, but maybe not at the pico top, but like most of the other thesis that I have heard and seen is November, December, right? So the end of 2025 will be the top of the market. Now, granted, there are some people on extreme sides of this, right? And there's people who are saying that we're going to have an extended cycle into 2026, which I don't think is going to occur. It could, but I don't think it's going to. It's not in my thesis right now. But either way, the further we go, the closer we are. Why would you want to wait until potentially everybody's trying to get to the door at the same time? Because there could be macro events that change it, right? And this is part of the issue. And this is what one billionaire is
They don't
talking
realize
about.
they're inside the.
We're going to listen to this in just a second. This is billionaire Ricardo Salinas from Mexico. And he's been a Bitcoin advocate for years. But he says most people don't realize they're inside the matrix and fiat is the biggest fraud. And the only way to get out of the fraud is through Bitcoin. And this is 100% true. I agree with this fully, right? But there are points in the cycle when you're looking at this market at a macro view, which we do on this channel, where we understand the market's going to go down precipitously at some point, and we're going to want to capture that downside. The same way when the market goes up at some point, we're going to want to capture that upside. And so capturing the upside is taking profits into that fiat, right? And then capturing the downside is selling the fiat and buying the crypto at much lower prices. Now, there's a lot of people who think that we're never going to hit those lower prices, we're never going to go there, but on the macro scale, they're correct. We're just going to keep going higher and higher and higher through the course of time. But if we understand that we're going to have these points of time where there's massive inflows into the market, which we're seeing from the crypto ETFs, from the crypto, treasury companies, that is the exit liquidity. That's why we're seeing people selling the coins, because if nobody was selling their coins, we would already be at $20 million, right? And so clearly people are selling their coins. This user on X called Chimp Zoo gave us a little bit of insight into kind of taking a step back and understanding where we are in the cycle and how these cycles operate. Chimp Zoo on X said basically been no pullbacks besides $98,000. We talked about this last week or the week before that. We had a little dip from about 110,000 down to 98,000, and everyone was like, yep, that was the capitulation. We're never going below that again. And I'm like, whoa, that was not even a dip. That was like a 10% drop in the price. In crypto, we know that we should expect 20, 30, 40, 50% moves to the upside and the downside. And so that was not capitulation. And the fact that people were trying to convince you it was capitulation tells you it's not capitulation. Because if you have to be convinced or like question whether it's capitulation, it's not. Capitulation is when like there's massive fear in the market, and the fear and greed index is all the way over to extreme greed for quite a while. And so you will know, and we have not hit extreme greed just yet. But again, extreme greed, extreme fear, you don't want to be making those decisions at the time. You want to have a plan to execute through that. Anyway, Chimp Zoo said at some point a deeper correction is going to hit. At some point, ETF flows will reverse. At some point, we won't see 300x, 500x, and 1000x longs win, but those 300 and 500 and 1000x shorts will begin to win. And we do agree with that on this channel. We just don't know when it's going to occur, where it's going to occur. But keep in mind, Saifedean Ammous, who's been a big Bitcoin advocate for many years and Bitcoin expert, and I showed you guys a video where he basically was warning, right, in June, July timeframe that we were reaching the 12 to 18 months after the Bitcoin halving, which historically marked the top of the market. And we've covered that extensively on this channel. So make sure you're subscribed and check out the other videos where we do talk about that. Sometimes we do macro conversations like we're doing today, and sometimes we do deep dives into individual cryptos or market sentiment and things like that. And so Saifedean Ammous, he's basically telling us here that you did not miss the Bitcoin train. He said, we are just getting started. Just because Bitcoin went up a lot does not mean it cannot go up a lot more. On the contrary, the more it goes up, the more it demonstrates product market fit, the more likely it is to go up. And I agree with this. People on my channel question whether, it's a right idea to sell Bitcoin now. Like if you're bullish on Bitcoin and you believe Bitcoin's going to keep going up throughout the course of time and barely correct, Well, then that means that there's actually no bad time to buy, because no matter when you buy, the price is going to keep going up. So the idea that if you don't buy now, you're going to miss out. This is FOMO, and this is not based on actually how markets work. Anyway, Saifuddin Ammous continued saying Bitcoin is different from stocks, bonds, and commodities because it has a much higher addressable market. So then he compares Apple's addressable market. He said, but Bitcoin is money, and its total addressable market is all of the planet's cash balances, which currently includes something in the range of $100 trillion in physical government cash and checking and saving bank accounts, plus another $120 trillion in government bonds, $22 trillion in gold, and arguably a chunk of the world's real estate and stock markets, which people are holding to beat inflation and not take risk in search of return. All in all, Bitcoin's total addressable market is in the range of $200 to $300 trillion. Imagine Dr. Evil hearing about these kind of numbers. He was just asking for $1 million originally. Anyway, moving on. All in all, Bitcoin's addressable market is $200 to $300 trillion, which is 100 times larger than what it is now. All these assets are trash compared to Bitcoin, and there's no reason for anyone intelligent to hold a significant position in them. Everything held in these assets has lost 90% of its value against Bitcoin. Sorry, I kept Dr. Evil on the screen. Sorry about that. And there's no reason for anyone intelligent to hold a position in them. Everything held in these assets has lost 90% of its value against Bitcoin in the last 5 years and will likely keep losing another 90% every few years. The only thing maintaining significant demand for those other assets at this point are their holders' old age, intelligence deficiency, and susceptibility to government propaganda. They can continue to hold these assets as they decline, making them poorer, or they can shift to Bitcoin and start getting richer. Either way, and regardless of what they do, the world's wealth is going to end up in hard money and not in the obsolete monies of the 20th century. And I agree with this. I was recently looking at some of the financials from some of the Las Vegas casinos, and they are not doing what they used to do, right? They have a whole new demographic. But when you really think about it, the boomer generation, this was a generation where families were like 14, 15 people in them, right? And now you have people barely having a family of 3. And so there's clearly obviously less people, but there's also a lot more concentration of the money and the wealth in the boomer generation, which they're getting older, they're not traveling as much, they're maybe not being as loose with their money, right? Because that's really what it was. Like the baby boomer generation is based on, booming of a new generation of people, right? But that generation was much bigger than the current generation, and so a lot of America is having to adjust to the new demographic and the wealth transfer, because the younger generation that is getting inheritance from that older generation that is passing on, they're not spending that money the same way that the previous generation was, right? They're not gambling. Well, maybe they're gambling in crypto versus going to a casino, because in crypto you can win. Casino, the house has always wins, right? Or at least most of the time. And so we're seeing a lot of changes in the way that people think about money, the way that money is moving, and this is we're in the transition right now. And so this is where you can capitalize if you understand where the money is flowing out of, so you stay away from that, and flowing into, so you can get into that. Saifuddin Ammous says Bitcoin has no cash flow to price it. Most no-coiners, people with no crypto, think this makes it a Ponzi, but that's because they have never experienced real money and have only has as a frame of reference the hot potato trash fiat, which everyone tries to exchange for hard assets as soon as they can. They're incapable of understanding people demanding to hold money is for its own sake, for its ability to hold value and not for cash flow. This is how gold became the money of the world without generating any cash flow. And this is why Bitcoin, which is infinitely better money than gold, is going to continue to monetize and grow. Finally, he says, nonetheless, Bitcoin's demand is highly variable and with leverage, and it will likely continue to be significantly volatile for the foreseeable future. So always keep in mind that it could decline significantly, and to manage your portfolio accordingly. The best is yet to come. And I would agree. Like, I'm not saying that Bitcoin's going down forever. I'm saying that there is a lot of leverage in the market. There's a lot of things going on, but there's also a lot of money to be made. I mean, not just with Bitcoin, but Bitcoin derivatives, right? Not just MicroStrategy. We'll talk about them in just a second. But remember the Bitcoin mining companies, right? Just a few months ago, we saw a massive decline in pretty much all the mining companies. And you look at a company like TeraWulf. TeraWulf was down to about $2.30, and now we're more than double that in just in a few months. And I think that what we're seeing here is the infrastructure play for Bitcoin is now the transition is there, right? And most of the Bitcoin mining companies, they've been on a round trip, right? I'm still bullish on Bitcoin mining companies, but they went low to high, back down lower than they were last year. And so the fact that we're seeing this in Bitcoin mining companies, infrastructure plays, individual cryptos, we haven't yet seen it with Bitcoin, but it would be foolish to think that we're not going to see it, especially with all the leverage that is at play here in the Bitcoin trade. TeraWulf, obviously, they're one of many different Bitcoin mining companies, but their transition over the last few years into a high performance compute data center and really transitioning not just for Bitcoin mining, but also AI potential capabilities. This, I think, is, and by the way, their board of directors is also very interesting in terms of the vast array of different industries that those board of directors actually come from. So it shows you also the expansion of really like the Bitcoin mining space, the infrastructure play, is becoming just as important as the individual crypto itself. And so this is something to keep an eye on, right? Already doubled in price. It did better than Bitcoin and Ethereum over the last few months. And it's not even a crypto, it's the infrastructure play. And so there is a lot of money to be made. But this is, again, when people think the trade is over, whether it's in Bitcoin or the Bitcoin mining companies or whatever sector or category of the economy, the money flows. It flows out of one asset and into other assets. And so if the money is starting to flow out of Bitcoin at some point, where is it going to flow? That's what we have to keep in mind. We have to keep thinking about. And no, it's not going to be flowing just into XRP, right? The XRP ecosystem continues to talk about this ISO 2000 or 20022 compliance. They've been talking about this since I started learning about crypto. Literally since 2018. The XRP community says XRP is the only ISO 2022 compliance coin, and it's going to be the only coin that's going to overtake Bitcoin. And then people with a rational understanding of the market are like, seriously? Like, seriously? This Bitcoin maximalist and a host of a podcast responded to this, where another managing director at Mo Partners said, Bitcoin is not ISO 2000, whatever, 22 compliant. This new major banking regulation goes into effect in July 14th. And you know which future coin that will be replacing Bitcoin is? XRP. Okay. He says, oh no, Bitcoin is not ISO compliant. And yet, Bitcoin is higher now that these quote unquote banking regulations for these ISO cryptos went into effect. It literally has nothing to do with crypto, by the way. But somehow the XRP army made it for years that this ISO compliance is only going to allow XRP to survive and every other crypto is going straight to zero. Hasn't happened and won't be happening. But that's the point where we are in the cycle. And now that that date has already passed, that this banking ISO 22 compliance regulation went into effect, they're going to say, oh, well, they're not enforcing it yet, but they will in a few months, and then XRP is going to take over the world. It's like, no, it's not. No, it's not. And by the way, another kind of place that we are in the cycle, and by the way, I'm not hating the XRP army, right? I always say, like, don't sleep on what XRP is going to do from a price perspective, because Ripple has done everything they've said they're going to do. XRP army has been correct over the years, but at the end of the day, Ripple is selling XRP. And so these XRP ETFs that are launching and all of this, they're buying it directly from Ripple, not from you, and that's not affecting the market. We know this. because the Bitcoin price, a lot of the Bitcoin purchases from all these Bitcoin treasury companies are being done off chain, right? Not on order books. They're being done just private placement, where like the Bitcoin mining companies directly sell to MicroStrategy or something like that. And so that's going to be the same thing with XRP with these ETFs. So any price movement in XRP is solely based on hype. And this ISO 22 compliant thing, I mean, now that we've passed the date, now what? The XRP army is going to move the goalpost. Oh, no, no, no. They're going to start enforcing it, and every crypto is going to zero except for XRP. It's like, no, it's not. Meanwhile, we have Anthony Pompliano with ProCap, which is his company, which is going to be a Bitcoin acquisition company, right? $1 billion Bitcoin acquisition company. Let's actually take a look at the current stock movements of ProCap. And I don't think that they've fully merged yet. I think that they're still in process. But you can see $268 million US valuation. And this, again, could be because the company is not fully merged yet with the new company, from my understanding. And so once that occurs, we may see some changes in the shareholdings and stuff like that. So but the point here is that Anthony Pompliano is a very smart individual, but yet he's starting a company that's buying Bitcoin at all-time record highs. Keep in mind, his company's all-time purchase price, like dollar cost average, is over $100,000. It's like between 100 and 110,000 currently. So that means if we drop under 100,000 at any point in the future, they're underwater. If we go to $50,000, they're 50% underwater. And that's the whole company. That's all they do currently is Bitcoin treasury. So it is very interesting when we see Anthony Pompliano going and being super bullish at literal all-time record highs. I want you guys to watch this with me, and we'll discuss after. And by the way, don't forget to give this video a free thumbs up. Also hit the subscribe button. That way you never miss a new video. And remember, we upload every single day of the year. If you want to help support the channel for as little as $1.99 a month, click the join button or subscribe plus button down below here on YouTube. Let's listen to the Pomp.
First of all, welcome to the greatest show on Wall Street. I think that Wall Street's full undivided attention now is on Bitcoin. And really, there's three things that drove this move. The first is that there's been record inflows into the ETFs. So last Thursday, 1.2 billion, second highest day. Those ETFs now collectively have over 140 billion. BlackRock's fund is now almost $90 billion in about a year. They went from not having a Bitcoin ETF to now they have a top.
By the way, that's false. It's over a year. It's almost, they approved it in the ETFs, I believe in the beginning of 2024. So we're almost 2 years in. Okay, 2 years. All the money has already flowed in. They've already bought a large quantity of Bitcoin. They are still buying some as well, but keep in mind, like, the ETFs are not MicroStrategy. It's not Michael Saylor deciding we're not selling any Bitcoin. The ETFs are shareholders. And so all you have to do is sell your shares. And then if there's no buyer on the other end, they're selling that Bitcoin on the market. And so just because we're seeing billions of dollars of inflow in the last few weeks or a record day, we're also at record highs. And so what happens when we get to 200 or 150,000 or 250,000? What do you think these Wall Street investors are going to do? They're going to take their profits from the ETF, which is going to effectively be selling Bitcoin. But yeah, almost 2 years these ETFs have been in existence, the Bitcoin ETFs. Actually, maybe even more, but I think it was 2024 that it began. Let's continue listening.
Top 20 largest ETF in the world. So there's a lot of inflows there. Second thing is the options expired at the end of Q2. And so all that downward pressure on Bitcoin obviously goes away. That helps kind of like a beach ball getting put underneath the water, right? Obviously it can pop back up. And then the third thing is that there was a lot of short sellers, and you started to see that build up. And as they got blown out, as Bitcoin ran, you get into this price discovery phase. And if you go back to November, we went from 70.
By the way, false. So when you have a short squeeze, which is what Pompliano is alluding to here, right? When you have so many shorts in the market, right? Because to short the market, yes, you can do what's a naked short, but typically, like, you have to have some cash balance, or you're borrowing the actual share or crypto or whatever. But the bottom line is when you see a lot of shorting, that could lead to a short squeeze where the price starts moving up because so many people are betting against it. And as the price goes up, they get closer to their margin call. And so they don't want to get liquidated. So then they end up buying the Bitcoin to cover, which also further pushes the price higher. That's how basically a short squeeze operates. But that's not price discovery, right? When you have a short squeeze and the price is moving very high, that is not price discovery. Price discovery, in my view, is what has been occurring with Bitcoin, right? Slow, gradual movement to the upside, very, very few like spikes to the upside or the downside. This is real price discovery, what we've seen over the last few years. What we are now seeing is FOMO. And this is not price discovery. A short squeeze is actually really bad because it makes the trader, the individual, believe what Anthony Pompliano is saying, that, oh, well, we have a lot of shorting, so as the price is going up, this is purely price discovery. This is totally normal, gradual, relaxing. Everything's going to work out. But it's not. Short squeezes work where they push the price up massively to wipe out all the shorts. But as you go up, you're getting more people shorting, more people, because they understand how this is going to play out. And then at some point, the short squeeze is over and people have covered their positions. And then the price straight down. And you guys don't believe me? Look at GameStop. GameStop was a perfect example of short squeeze back in, I think, 2021. Yeah, you can see that right here. We went from effectively $2, $3, $4, $5, right, all the way up to $80. So from $4 to $80 is a 20x. And then boom, straight down. Went right back up because the volatility, right? It's like a trampoline, right? You come down from going that high, you take a little bit of a bump again. But those bumps higher gets lower and lower and lower and lower and lower and lower until you're basically back at the bottom, right? And that is how a short squeeze works. GameStop is a perfect example of that. And this was just retail traders. Now you're talking about retail traders and Wall Street and buying with debt and buying the top of the market. Guys, this is a clear indicator to me where we are in the cycle, where people who know about Bitcoin, know about the Bitcoin cycles, are ignoring it and saying, no, short squeeze is going to be total price discovery. No, we've already had price discovery. Like if Bitcoin in the next bear market sits around 100,000, yeah, that would make sense. It's not sitting above, it's not sitting like at 150 in the bear market. Next year, 1 year from when I'm recording this video, we're probably going to be lower than where we are today. So yeah, a short squeeze is not positive for the market. And it's not price discovery. It's actually quite the opposite. Let's continue listening in.
1,000 to 90,000 in about 2 to 3 weeks, and to 90. If you go back to November, we went from 70,000 to 90,000 in about 2 to 3 weeks, and 70,000 was a new all-time high. What we're watching now is we broke through that $110,000 range. That was the previous all-time high. I don't know if it goes to 140, but it sure is going to make a big move here because you are in a true price discovery phase.
And how much of this do you think at this point then gets driven by ETFs, or do you think it's really more going to be individuals buying the underlying asset?
Well, the reason why I call it the greatest show on Wall Street is everyone wants Bitcoin. Like this is no longer a contrarian trade. This is a consensus trade now. And so you have the ETFs, you have the Bitcoin treasury companies, you have retail, you have sovereign wealth fund.
Now, I want you guys to hear, he did say, I don't know if it's going to go above 140, 150, which is very interesting as well. It's actually really more interesting than anything else we've heard today. But anyway, moving right along, Jordan Peterson asked Michael Saylor about Bitcoin ramping up. And, you know, Michael Saylor's response is a typical Michael Saylor response. Let's listen in.
Well, so why won't...
Going everywhere.
If it's ramping up in terms of its success, and let's say that that's exponential, because perhaps it might be, why won't Bitcoin just suck the investment capital out of everything?
It is, and it will.
Okay.
That's why I'm here.
He's the savior. So yeah, I mean, but this is over the course of time, guys. You have to remember that. Jim Chanos even said, for those of you wondering, MicroStrategy's MNAV dropped slightly last week despite the Bitcoin rally. Now, it did drop a little bit, the MNAV, right? what their underlying Bitcoin is worth compared to their market cap. But keep in mind, the Bitcoin price was going up, and they were also like, I think it was just the market, like nobody was necessarily buying and they weren't necessarily selling, so it was kind of just stagnant. But now we're back at 1.9 NAV when I'm recording this video, right? Right shortly after they made an announcement of another purchase, right? Purchase of for almost basically $500 million, 4,000 Bitcoin, and it looks like around 4,000 is kind of what they're eating up in the market every week, and the flywheel is going to continue with MicroStrategy. But is it a risk? Absolutely, it's a risk. But the point here is that I believe the Bitcoin trade is end stage, very end stage. And we are now seeing a transition and a movement of money. You heard Anthony Pompliano said Wall Street is focused on Bitcoin. I don't necessarily think so anymore. I think they're now focusing on Ethereum. We're seeing companies like GameSquare completing Ethereum purchases, and they want to get to a $100 million treasury strategy. We talked about BTCS. Their CEO just posted this on X saying, I'm proud to share that as of July 11th, NASDAQ's BTCS, which is the company, you can look at the stock market. Let's just actually pull it up real quick. BTCS. Enter. And by the way, historically, this stock has a lot of volatility. So you can make a lot of money, but you definitely want to take profits, along the way. As you guys can see in the last bull run. I mean, we did massive, massive moves. But after that major jump to the upside, straight down, right? And so it's something to keep an eye on. Anyway, he said, BTCS reached $97 million in combined crypto and cash market value. This includes 29,000 Ethereum, which marks a 221% increase in Ethereum holdings since last year. Year to date, BTCS has raised $62 million to support the execution of their DeFi and TradFi flywheel strategy. Here's a closer look. So again, currently, they have about 29,000 Ethereum. Total Ethereum value is about $87 million on the date that they did this, around 3,000 per ETH. And then you can see that they're actually staking their coins. ETH is in Rocket Pool, 4,100 ETH. 6,300 ETH are in solo nodes, right? Staked coins. They're earning, anywhere from 5 to 8% per year. ETH posted as collateral on Aave, right? Lending 14,000 ETH. Obviously, that's a risk versus the staking, but it's something that they're tapping a source of liquidity for their coins. This is a big difference between the Ethereum treasuries and the Bitcoin treasuries. The Bitcoin treasuries, you can't do anything with the Bitcoin yet. They're not really doing anything with the Bitcoin, even though they could. I think down the road, that's the play for MicroStrategy and all these different companies to take the Bitcoin and use it as collateral to, tap into other assets that are maybe cash flowing. But currently, that's not where we're at. And so this is why I think Wall Street is going to shift and is shifting towards Ethereum. The CEO continued saying, our DeFi TradFi flywheel is working. Year to date, BTCS has raised through a mix of ATM sales, right, selling the shares on the open market, above market convertible debt, and DeFi loans to power the Ethereum strategy. Now you can see right here the sources of capital in 2025. It looks like about $40 million was ATM sales, right? Selling shares on the open market. Obviously, this dilutes the shares that you're holding, but if they're buying Bit or Ethereum with it, it could keep it around even. This is why we've seen the price of MicroStrategy continue to go up, even though they're selling shares in the open market. Above market convertible debt, $7.4 million. Aave stablecoin loans, $15.5 million. So it's interesting. They're making double what they're making from convertible debt. They're making double that in loans. It's pretty like productive if you think about it. Obviously, loans are risky, but Aave seems to be the place for DeFi right now, and seems like one of the most safest like environments and ecosystems for that kind of activity, DeFi. Anyway, he said, leverage cap. We maintain a disciplined approach to leverage, guided by a strict 40% net asset value cap that includes both DeFi borrowings and convertible debt. And so they're managing their risk here, which is, I think, very good. Their current debt to asset ratio is 24%, which is below their 40%. And that's good, right? Because that allows them to make adjustments in the portfolio if the prices of the cryptos go down precipitously. And the execution of the DeFi TradFi flywheel in 2025 has driven remarkable results, with our ETH holdings increasing by 221%. This growth highlights the strength of the strategy and the value of the seamless integration across DeFi and TradFi. And so, yeah, this is really great for BTCS. I think that BTCS is definitely not. I think that it's going much higher. Let's just say that, because right now the company, when I'm recording this video, the company's valued at about $100 million, right? And they have in crypto, what was the number? Total assets in crypto and cash, basically the same thing. So right now, their holdings are equal to their market cap. Okay, so their MNAV, which what we talk about a lot with MicroStrategy, their MNAV is 1. MicroStrategy's is almost 2, right? Which means that the share price should be about $250, maybe $280 versus $440 if you're just taking the underlying assets. But if you think about BTCS, they're actually making money. So they're cash flowing as well off of these assets, which they're not doing in the Bitcoin space. And that is, also good for the business. But I want you guys to think about this, right? Right now, their MNAV is 1, right? Which basically means their holdings is equal to their market cap. So it's a neutral valuation. It's not overvalued, it's not undervalued, it's at valuation. But let's say, right now, Ethereum, they're pricing it at $3,000. But let's say Ethereum doubles to $6,000. What is this going to do to the BTCS price? Now, if you're looking at it the same way as the MNAV is going to be 1, that means the price is going to effectively double. But because the volatility from the crypto space, we're not necessarily we're seeing that volatility in the companies that are buying it with leverage or not with leverage. I think that the potential to see a premium to the NAV is very high as the price of Ethereum increases. And so there's a potential, if Ethereum doubles, that the BTCS price will do more than just double. Even if it's 2.2, 2.5, 2.6, 2.7%, or 2.7x, that's still better than the underlying asset. And this is where I think a lot of Wall Street are looking at these numbers and saying, well, maybe these Ethereum treasury companies are, number one, clearly a better trade right now than the Bitcoin treasury companies, and 2, are not even pricing in the potential of Ethereum doubling or tripling or quadrupling. If it goes to $10,000, these companies are going to make people more money than probably any crypto, including MicroStrategy and Bitcoin, for the remainder of the cycle. That's my opinion. I could be wrong on it, so make sure you guys do your own research. But I really want to know what you guys think about that. And by the way, it's not just, BTCS. We also have BitMine Emergent Technologies. Now, BitMine Emergent Technologies, this is the company where Tom Lee is the chairman of the board. And right now, BitMine Emergent Technologies has $500 million worth of Ethereum, which is, I think, the number one company right now. And so what has happened with their stock? I mean, look at this. Just from before the announcement to the announcement, we basically did a round trip, $4 all the way up to $140. That's, what is that number? 50x, something like that. And then we're back down to $44, which is still a 10x just from pre-announcement. And again, where their valuation is as a company is $2.2 billion, but they're only holding $500 million of Ethereum. Why? Well, number one, they're probably going to be doing things with the Ethereum like staking so they can earn cash on it. And the fact that they're probably going to buy more. And so the market is overvaluing BitMine, but it hasn't done that yet with BTCS. Will it do it? I don't know. But again, the way to make big money on these trades is to look for trades that are going to have a positive or negative premium to the NAV because this could be a potential play. We did this with Grayscale in the previous cycle. Grayscale is still on the table this cycle, but there's a lot less volume going into the Grayscale products when you compare it to like Bitmine. For example, if we go to MarketWatch, we can actually see the volume of these trades. Well, let's start with BTCS. And this is something to keep in mind as well, because as volume increases, that typically means the interest is increasing, and therefore the prices increase. So if we look at BTCS here, you can see the average 65-day volume is 4 million shares. And currently, when I'm recording the video in the middle of the day, is 10 million shares. So already we're 2.5x more than what the 65-day average is. And by the end of the day, we'll probably be at 400x. So 400%, which is a 4x. So we're seeing quadruple the amount of volume than we've seen previously. Let's look at Bitmine, Immersion Technologies. And yeah, this one in the midday is already almost 500% over the average. 5x the average. And so when you're seeing peaks in volume like this, typically, unless they're selling a lot of shares on the open market to raise money, which they could possibly be doing, this is an indicator as the volume increases, the price is going to go up. But when you start to see a reversal in the volume, which could happen very, very quick, you can go from like immense interest in this to nothing overnight. When the volume decreases, you see a big drop in the valuation fairly rapidly. And so you really want to keep an eye out for volume increases, because as volume is increasing, the price is going up. This is exit liquidity, right? To pull money out, to take money off the table, to take profits out of the market. Because even if you don't believe that we are at the top or that we're close to the top, I mean, I think it's pretty clear that we will correct at some point, and I don't think most people are ignoring that, right? 100-bagger Ethereum could hit 1.5 million over time. EJM Capital founder says that approved Ether staking ETFs could kick off a rally that could see it rise by more than 100x and eventually hit $1.5 million per token. He said this could catch everyone off guard. He said, our analysis suggests that the Ethereum network is underpriced. Obviously, Ethereum is quietly becoming the dominant rail system to transact in crypto with deflationary economics. Also, we know TradFi is using Ethereum and Ethereum rails, right? And so the potential of an Ethereum ETF could put the price up. He said large companies could be catalysts for a 10-bagger plus move. It is in the cards over the coming years. Keep that in mind, years, not days, not weeks, years. And I would agree. We are going to see the slow transition, and especially in a bear market, you're going to see massive, massive accumulation. And so again, when we do hit a bear market, this is the most bullish thing ever, more bullish than where you are today. Because once the dip occurs, like with all of this news coming out about what these companies are doing and their acquisition strategies and the fact that they're going to be staking Ethereum, buying Ethereum, taking out more debt to buy Ethereum, even Bitcoin, right? If we drop by 50, 60, 70%, this is a buy, obviously. This is a buy. And so being bearish is not actually a bad thing. It's actually even being more bullish. So I don't want the market to fall. But I also know the market will fall because nobody thinks the market is going to fall. So it's definitely going to fall. And when that fall occurs, that's a bullish fall. And I'm not talking about 10%, right? From 110,000 down to 98,000. That wasn't a dip. I'm talking about a dip, like 50,000, 40,000, 30,000. A lot of people don't think it's going to occur, but it can. And the more people that think it won't, the more likely it will, as we're getting into the extreme greed section of the cycle and of the market. We're not just there yet. We're very close, though. And so Cathie Wood seems to be becoming an Ethereum maximalist as well. She said in response to the Ethereum Foundation publishing a blog announcing intent to go all in on integrating zero knowledge into Ethereum's layer 1, she said, I can't say I understand all the details here, but the Ethereum Foundation does seem to be proposing the right moves for scalability and privacy to maintain its lead in the institutional world. And I'm not saying that I agree with everything Kathy Wood says or that she's right all the time, but here's the deal. If Kathy Wood is, has all of these different ETFs, is very bullish on crypto, and is in the market and is an institutional major player, right? You don't think that other institutions are going to say, wait, she's saying that Ethereum could be the future of privacy and scalability and that what they're doing is good for the network? We need to learn more, and they will learn more, and they will probably invest. And this will lead to, I think, a major move for Ethereum in this cycle. And potentially, as the move is away from Bitcoin, it will transition into Ethereum. Let's see. Let me know what you guys think down below. Don't forget to give this video a free thumbs up. Also, hit that subscribe button. That way you never miss a new video. I'll see you on the next video. Invest responsibly, do your own research, and crypto on.